Because the Fed usually lags the market tremendously. They look at the economy, they have their economic models. Traders in the financing markets and the money markets are much more sensitive. So typically those markets lead the Fed. The Fed would just be a confirming indicator if they finally cut. But Eurodollar futures are down 150 basis points since November. That's the equivalent of 6 Fed cuts. Wow. That means that when this correction ends, we're going to have more shadow banking, not less.
Right.
We're going to have a more intense credit boom going forward.
And that's why you're still bullish in the long run. Samir, what about you? Again, how much do we need the Fed to do here and when in order for markets to pull themselves out of this?
You know, we don't think the Fed cuts this year. You know, for the most part, the economy has slowed. It has moderated from last year, but that was, to be expected. Again, there were some things going on with taxes and fiscal spending that just weren't going to be repeated. So we still think things are pretty okay in the U.S. Unfortunately, it's the international side that continues to disappoint, especially Europe.
Yeah.
And that's really what's weighing on U.S. yields. So for us, when we look at U.S. stocks with pretty good, healthy earnings growth, even now, compared to U.S. yields, which are being dragged down by international yields, we think U.S. stocks are still pretty interesting. And then on the emerging markets front, they're also kind of beaten up. And if you think the Fed will cut, that'll probably be a disproportionate beneficiary.
Even though you don't think they're going to cut. So
exactly.
Okay, so let me ask you just about what is happening overseas, Samir. So German yields are negative again, deeply negative. The last time that was true, 3 years ago, our U.S. 10-year was below 1.5%. We're well above that now. What does that tell you?
I mean, it tells you that there's room for downside in U.S. yields. And, Seema mentioned the technicals. And if you take out kind of 2.25%, 2%, it's going to be tough to tell because, there are a lot of people that are still very short if you look at CFTC positioning. So it does tell you that, again, markets tend to overshoot, the technicals do take over, and that there is room for yields to move lower. Again, we think we are trading below fair value. We would be neutral duration, but we would not be extending duration at this point.